Good afternoon, and thank you for joining us for today's NCUA webinar, FinTech and Access, Future Possibilities for Enhancing Financial Inclusion Through the Use of Technology. I am Ron Good, an Instructional Systems Specialist in the Office of Credit Union Resources and Expansion at NCUA. Before we begin, I have a few administrative announcements. If you're having problems hearing my voice, please adjust the volume on your computer. And if you're still having problems, use your Ask a Question feature on the bottom of your console and send a message to our support team, and we'll help you right away. Please make sure that you allow pop-ups from this site. In approximately 2 weeks, the webinar will be closed captioned for an on-demand viewing in the NCUA Learning Management System. You will be able to review the webinar and download a PDF version of the presenter's PowerPoint presentation. You should have received an email with instructions on how to download a copy of the presentation. If you did not, you can download them today by clicking on the registration link for this webinar and entering your contact information again. You will get a message saying you have already registered for this event. Just click OK, and you will be taken to a landing page where you can download a copy of the slides. You must have an account on the Learning Management System to view this webinar as well as other valuable training. There is no cost to access the Learning Management System, and it is only available to credit union volunteers and employees. To set up an account, go to ncua.gov. Support Services, Credit Union Resources and Expansion to find the link under Learning for the LMS. There are currently over 200 courses on various topics, including courses on serving the underserved. I have a disclaimer I need to read for you. The materials presented in this webinar are intended as an informative and educational summary of general information about adopting technology to promote greater inclusion. The NCUA has taken reasonable measures to ensure the quality of the data and other information produced by the NCUA that is available in this presentation. The NCUA, however, makes no warranty, express or implied, nor assumes any legal liability or responsibility for the accuracy, correctness, or completeness of any information that is available through this presentation, nor represents that its use would not infringe on privately owned rights. The slides are intended for educational and discussion purposes only and do not constitute legal advice nor replace independent professional judgment. Reference to any specific commercial product, process, or service by trade name, trademark, manufacturer, or otherwise does not constitute an endorsement, recommendation, or favoring by the U.S. government or NCUA. So this is our agenda for today. We're going to have introductory remarks from the Resource Division Director, Christy Kubista-Hovis, who will also introduce our speaker. Then we will have our presentation, and our speaker has very nicely outlined the different topics that he will cover during his presentation. We will have time for Q&A, and then we will close out the webinar. Before we go any further, I have a polling question I would like you to answer. Please let us know if you are a credit union, what asset range your credit union is. A, $0 to $50 million, B, $51 to $250 million, C, $251 to $500 million, D, $501 million to $1 billion, and E, greater than $1 billion. Also, if you're not a credit union, please let us know that as well. And I see we'll give it a few more minutes. And if Franz could, just share the results for us. Awesome. We have a few people that didn't answer. That's fine, but we have a nice range of credit union asset size, and that's always good. This topic is a very timely one, and I'm sure everyone will find value in it. So now, it is my pleasure to welcome to our program Christy Kubista-Hovis, Resources Division Director in the Office of Credit Union Resources and Expansion. Christy, welcome to the program.
Thank you, Ron. Again, my name is Christy Kivistohovas, and I'm the Director of the Resource Division over in CURE. We are responsible for all the grant programs, all the MDI programs, as well as all the training and development programs that NCUA has. So that includes having technical assistance grants to urgent need grants to some of the revolving loan funds, as well as doing these webinars and particularly managing and handling the LMS, which has, again, as what Ron was saying, over 200 courses that are available for free for those credit unions and those who associate with credit unions. And we're always interested in new concepts and ideas for future webinars and training and development. So please, please contact us with what you would be interested in hearing about, and we'll make sure to do a follow-up or to include those in our future trainings. But with that, I know that you're not here to listen to me or to Ron or any of my staff. Rather, you're here to listen to Mr. Charles Weiss. Charles joined NCUA on January 3rd, 2023 as the Director of Financial Technology and Access. In this role, he serves as the Principal Advisor to the NCUA Board on Agency Policy with respect to FinTech developments and transformation initiatives in the financial services sector, including cryptocurrency, blockchain, and distribution ledger technology. Director Weiss's responsibilities include exploring methods to enhance the virtual examination and supervision process and promoting the development and deployment of technologies and innovations that can cause financial inclusion and equitable and affordable consumer access within the credit union systems. I can tell you that you can expect future webinars with either Charles or his staff because of these very interesting topics that he's in charge of. Prior to selection as Director of Financial Technology and Access, he served as the Commissioner of the Kentucky Public Protection Cabinet Department of Financial Institutions, or DFI, for 14 years, and is Treasurer of the National Association of State Credit Union Supervisors. Mr. Weiss was also Chair Emeritus of the Conference of State Bank Supervisors and a board member of the Kentucky Financial Empowerment Commission. As Commissioner of the DFI, Charles was responsible for the regulatory oversight of all Kentucky state chartered financial institutions. And prior to joining the Kentucky DFI, he was an employee of the Federal Deposit Insurance Corporation for 18 years, serving as the subject matter expert on subprime lending and capital markets. In 2007, Charles was the FDIC Chicago Regional Employee of the Year. And with that, I'll let Charles take it from here. Welcome.
Well, thank you, Ron, and thank you, Christy. Hopefully everybody can see my screen, and you should see the FinTech and Access team up on the screen. But I first want to start out by thanking, one, the attendees that are here today to listen to this presentation, to ask questions, and participate in hopefully a discussion about this topic of FinTech and financial inclusion. But I also want to thank CURE for hosting this webinar, for inviting me to participate, and giving me the opportunity to talk about three topics that I'm very passionate about. And that's one, the credit union industry; two, technology and uses of technology; and number three, financial inclusion. So before I go on or go on with the rest of the presentation, just want to give you a little bit of a background of why I'm passionate about those three things. The credit union industry, I've been a member of a credit union since I was 12 years old. And as Christy just said, I've been a supervisor for 33 years. I have 4 grandkids, so we will not do the calculation, but that's over 4 decades that I've been a member of a credit union. And during that time, it's had a tremendous impact on me and my family. Matter of fact, the first home my parents bought, they financed it through a credit union. And the credit union I'm a member of has been there to help me out through various times in my life. Some difficulties, some prosperity issues sometimes as well. But the credit industry has been very important to me and my family, and it also has a tremendous impact on the economic well-being of the United States as a whole. Second thing, technology. Technology is unbelievable. Some things it can do to help our lives better, to make our lives easier, to help us connect with people. So technology is powerful, but it's also just a tool, and I'll talk about that a little bit more. But finally, financial inclusion. Why am I passionate about this? My parents and grandparents grew up in rural communities, agricultural based, and oftentimes lacked access to financial services and products. And I saw the impact it had on them firsthand. And I've also seen during my time as an FDIC examiner, as the commissioner for the Department of Financial Institution, the devastating impact it has on segments of the population and individuals when they don't have proper access to fair and equitable financial products, services, and financial institutions. So that's why I'm passionate about these three things. And one of the things I just love that the NCUA has done is partnered these two things together. FinTech, looking at technology, how it's being used in the industry, but also pairing it with access. So this is the Tech and Access team. One important person is left off here as well, and that is Katrina Higgs. Very pleased to announce that Katrina started with the NCUA on Monday as the new Deputy Director for FinTech and Access. Because it's such a short time frame, we didn't have time to include her picture here, but she is definitely part of the team. And again, that's Katrina Higgs, started with the NCUA on Monday of this week. So this is her fourth day on as the Deputy Director for FinTech and Access. But the other team members are, again, myself. Natasha McAdoo oversees our Access program. And Access is actually an acronym. It stands for Advancing Communities Through Credit, Education, Support, and Stability. And that's basically the financial inclusion initiative at the NCUA. The other team member is Heather Phelps. She does our virtual examination program. She's our virtual examination program analysis officer. And she looks at ways that we can use at the NCUA technology to help our examination process be more effective and efficient. And I can tell you each one of these team members, Katrina, Natasha, and Heather, are very passionate about what they do, and they have very great, rich stories about what motivates each one of them. And I can tell you as a team, we're very focused on making sure that we provide the best service we possibly can for understanding technology initiatives, but also pairing that. And I love the fact that they're paired together. And I view it as the access piece of it, the financial inclusion piece of it, gives purpose to the FinTech piece of it. Oh, there we go. Sorry about that. I was having trouble advancing my slides. So I've got some barriers listed here. And what are some barriers to financial inclusion? And again, what do we think of? And I want to spend a little bit of time here. What do we think of? What does it mean, financial inclusion? And one of the things our chairman talks about all the time during his speeches is everybody deserves fair and equitable access to financial products and services. So that's what we mean by financial inclusion. Are we providing that fair and equitable access to financial products and services? And is that access to being provided through a federally insured, sound, regulated financial institution like a credit union? So in these topics that I talk about, and this isn't an all-inclusive list, it's just some of the more prevalent barriers to financial inclusion. So when I talk about these, that's the context of it. And one of the barriers to financial inclusion that we're seeing today is connections. Is the financial institution connected to the population that needs these services? Is there segments of population within a state, a county, or even the U.S. where they don't have access to financial services and products in a fair and equitable manner? And one of those barriers could be, is there a communication issue? Is there a communication issue with people that may have just recently migrated or come to the United States and is having difficulty communicating with financial services companies? Another barrier that could be along those lines is a communication barrier, but also to what are the connections to that community? Someone in that community, do they feel connected to the provider of those financial services? And if not, if there's no connection there, if a connection hasn't been made, then that could be a barrier. Second thing, or another thing that I have listed here, could be a trust issue. Do the communities that need these financial services, that need access to financial services, do they trust those financial service providers? And one of the things that going along with that, when we open up accounts at financial institutions or seeking services from them, oftentimes information is needed. And there could be a trust factor that we need to understand is, does the individual not only trust the financial institution that they want to do business with, but what's going to happen to the information that they provide, or even the information that occurs during the transaction, whether it be a deposit, a withdrawal, a check, or anything like that? What's going to happen? What's that financial institution going to do with that information? And it could create some trust issues. Another barrier could be identification. What are the member identification procedures at the credit union that someone is seeking to be a member of? Or what identification needs to be presented to acquire a financial service or participate in a financial product? And also too, what is that information? Why is it needed? Why is it required? And again, going back to the trust issue, how will the credit union or financial services provider, how will they use that information? So again, identification could be a barrier, could be a problem. And I'm not saying that people don't have identification, but then they have some questions of, okay, why do you need this for me to perform this activity or seek the service? And then what are you as the financial institution going to do with it? Financial deserts also create barriers, and financial deserts are basically populations or segments of communities that are either unbanked or unbanked. They don't necessarily have a connection to a regulated financial institution or an insured financial institution, such as a credit union. And that's a problem and an issue. And I'll get into that a little bit in just a little bit regarding the appeal. Why is there an appeal to some alternative financial products and services? Another category in this financial desert piece is credit invisible. There could be people out there, individuals out there that are just purely credit invisible. They have no credit history, or their credit history is very minimal. And one of the examples I provide here is my own son. My youngest son is in his 30s now, but a couple of years ago, he had no credit. He would be in that category of credit invisible. So if he was to go in and try to obtain a loan, buy a car, or seek some other financial product or service, could be a very difficult situation if he has no credit history, or the individual has no credit history, or it's very minimal, and there's not enough information there on a historical basis to make a credit decision. And the last thing I have listed on this slide is, what is the appeal to alternative financial products and services? And what I mean by alternative is an alternative to a federally insured financial institution like a credit union. A lot of times, strategically, those companies try to locate where they are nearby or even in the center of a financial desert or a population that is unbanked or unbanked. And they have a presence there. They have a physical location. And part of that strategy is, oh, gee, you can trust us. You members of this community, you can trust us because, see, we're here. We have a physical location. And there may be some trust built in by, I can go in and talk to somebody, I can visit the facility, and that may create a sense of trust as well. Also, some customers are made to feel welcome when they walk into these alternative financial institution providers. And also, too, sometimes it gets around the community that there's an implied yes. Whatever you need, this institution's gonna be able to do that for you. Go in there, they can get you a loan, they can do a money transmission, they can do whatever you need, and they're never going to tell you no. But the downside to a lot of these alternative financial products and services is they typically come at a very high cost that could actually be harmful to the consumer. And so those high costs can definitely be harmful to the consumer. It can cost a lot of money, eat a lot into their available cash flow for that week, that month, or until their next paycheck. So all those are difficult barriers that financial institutions must overcome. But to overcome those and to address those, a couple things that credit unions and other financial service providers must keep in mind. If they're going to have a strategy to address these barriers, number one, it must be focused. Number two, they must have intentional actions to try to overcome these connection issues, trust issues, if there's identification issues. Three, they must be impactful. Their focused, intentional efforts must have an impact on the community they're trying to provide services to. And finally, the services must be an added value to that individual that needs those financial services. And that's part of the appeal of the alternative financial products. They tend to try to position themselves as, hey, we're adding value because we may make you feel welcome when you come in. We're going to give you an implied yes. We're going to do everything we can to get to a yes for you. But the downside, again, to those financial alternatives is a high cost. So again, institutions must be focused on what they're doing. They must be intentional in reaching out to these communities. They must have an impact on the communities they're trying to reach, and they must add value. This is a survey. I'll briefly go over this. It was conducted by the FDIC in 2021, and they actually published this, and it's the FDIC National Survey of Underbanked and Unbanked Households. So I looked at two different categories here, an unbanked household and some of the reasons that were provided by the people that participated in the survey for not having a bank account. And these are the top three reasons. 21.7% of the people that responded to the survey said they just didn't have enough money or thought they didn't have enough money to meet the minimum balance requirements. One of the things that I love about the credit union industry, there's so many things, but one of them is typically, as long as you qualify to be a member, it's usually a very small share requirement account to become a member of a credit union. Matter of fact, I think when my parents opened up my account when I was 12, again, we won't go over how long ago that was, the minimum deposit at that time or the minimum share that had to be opened up was $5. So again, I think that's a misnomer. I think it's a misinformation that's out there, but it's a reality in the fact that people feel that way. Almost 22% said, hey, I don't have enough money to meet the minimum balance requirements of that institution. 13.2% cited they avoided a bank due to privacy concerns. And again, it ties back to the barrier we just talked about. What's the connection to the community and what's the trust level? And third speaks directly to that as well. 8.4% cited they just simply don't trust the bank. Don't know what they're going to do with their information, why they need all this information. So again, this is participants that answered or responded to the survey. 8.4% of them said they just don't trust banks. On the flip side of that, looking at banking households, and what I find really interesting is the third one we get down to it. There's been a sharp increase in the use of mobile banking recently, and a lot of that was brought about during the COVID period where we didn't have access to physical spaces. And during a time frame of 2017 to 2021, saw an increase of usage of mobile banking products, went up from 15.1% to 43.5%. So nearly half of the customers are using mobile banking products. Use of teller, and the flip side of that, use of a bank teller declined. Again, decreased from 2017 when it was 24.8% to 2021, and it dropped down to 14.9%. But one of the interesting things, and again, this ties back to one of the barriers I just talked about, use of a teller remains prevalent among certain segments of populations, including lower income households, less educated households, older households, and households that do not live in a metropolitan area. So again, those populations and those communities want to go in, they want to feel that they have access to a physical building, and they see that kind of as a form of trust. They're there, they can see you, they can walk in and talk to somebody. So again, sometimes the communities and segments of populations that may have these barriers that they have to overcome, one way to overcome that is use of a teller, use of a facility, seeing you there in their community, knowing that you have a presence and knowing that they can trust you. So technology, shifting from what are the barriers to what are some of the technology solutions to some of these barriers. I want to preface this too with technology. It's a tool. And one of the analogies I use all the time, a hammer is a tool as well. A hammer can be used to build a house, can be used to construct something, but a hammer can also be something that's very destructive and can destroy things. So again, technology is a tool. We've got to be very careful of how we use it, making sure that we're using it to build things up and not destroy or damage or harm something or someone. Also, too, with technology, there's many different solutions, many different platforms. And I want to make clear that even though part of my purview with the NCUA is FinTech and access, I don't necessarily think that technology can solve all the problems that we have. Again, it's a tool. It's there, and we have to be selective of how we use that tool and how we select what's the right tool for the situation. Another thing too with technology is what I have down here in the first thing is credit unions, whatever technology solution they choose, whatever they want to include in their technology stack, that has to fit into their strategic plan. Oh gosh, sorry, I touched my computer. Does the technology solution align with the plans and goals of the institution? And again, if those goals and plans talk about how are we going to overcome these barriers that we just talked about, that strategic plan, and if a credit union wants to have an impact on the community or reach out to a community that has these financial barriers, again, that strategic plan has to be focused, it has to be intentional, it has to be impactful, and it has to add value. And one of the things I'm going to offer this as a solution here of one of the things, and this is on another slide, but I think it's important to mention here. I had one credit union do a presentation 10 years ago. They were focused, they were intentional, and they wanted to add value. And they decided to start doing a lending program based on I-10 numbers. And that is offering loans, making loans possible, trying to get to those yes for individuals in their society, in their community that didn't have a social security number, but they had an I-10 number. And again, this was a 10-year program. They were focused, they were intentional, it had an impact, they added value. A 10-year period, they saw that their loan portfolio was so dramatically impacted that 40% of their loans today are I-10 loans. So that's a credit union that's being intentional, purposeful, and using technology as a strategic plan to reach out to a community and overcome some of these barriers. Enhanced member service and experience. One of the models that I love to look at from a technology perspective or use as a reference would be the Uber model. Think of how the Uber model has changed the way we engage a taxi. Before, you were lucky if you could stand on the corner, wave one down, hopefully someone could pick you up. You didn't know what the fare would be until you got there. Again, payment of it, was it going to be cash? Was it going to be credit card? Could you trust the transaction? Think of how the Uber model changed all of that. I can order an Uber. I know when it's coming. I know when it's going to be there. I can see it coming. I know what kind of car it's going to be. I know the driver's name. I know exactly what the fare is going to be. I don't have to worry about handing cash. That's the transaction's already done with. But what's really impactful, what I love about the Uber model as well, both sides of the transaction can rate the other. I get to rate the driver on how they did during the transaction, but interesting enough, they also get to rate me. That's some real-time feedback. And could you imagine that being implemented into the financial services model? Another thing that's powerful about technology can be used to customization of the offering is a crucial factor for success. We humans are herd creatures. We tend to go with the crowd. One of the reasons social media is popular today right now is you can see how many likes someone has. And if they have 1 million likes, oh, they must be popular and I got to watch them or follow them. So we tend to be herd creatures when it comes down to receiving products and services. We want individual products and services. We want that individualized attention. We want to feel to be made special. And one of the things technology can do is help with that. They can individualize and customize products for the individual. They can also add value and convenience to the member. Think of how much more convenient the offering of financial services through mobile products, applications on your phone, always having your phone with you, that can give you access to the market, but also give you access to financial options, and such as making a deposit, getting a loan. So it adds value and convenience. And finally, know your member. What is the member trying to achieve and accomplish? And again, all that can be done through technology. Don't want to give the impression that credit unions should be going out there and monitoring everything that the member is doing. But with that information they have, it can help them. Help the credit union customize products and services to help the member achieve what they're trying to accomplish, and again, add value to the process. Technology continued. A couple more points here, and then we'll move on to another topic. But technology continued. We no longer go to a marketplace to shop and acquire things. We are continuously in a marketplace. One of the things I did recently, just to test kind of to test to see what this would really true, but also too of the convenience factor of it. I wanted a small thing. It cost around $20. Could have went to Walmart to get it. It was 11 o'clock at night. So I just said, hey, let me see if it's available online. So I got online, did an online search, said, yes, we can deliver this to you. This is a price that I was agreeable with. And if you order it within the next 30 minutes, we'll have it on your front door by 8 a.m. Sitting there thinking, oh, no way. But technology made that happen. And I did place the order, partially one, because I did want the product, but then two, also wanted to see if it was really going to be on my front door at 8 a.m. Sure enough, got up, had breakfast, went to start in the day. So I said, I'm going to go check. And it was sitting on my front door at 8 a.m. And that's some things technology can do. We can also do that with financial services, and it's shifting financial services where we no longer have to go into a financial institution if we don't want to apply for a loan. We can do that online. Many times, one of the outside of a house, the next biggest thing we're going to finance is an automobile. Think about how shopping for an automobile is so much dramatically different today than it was just 10, 15 years ago. I can go online, could do a search, see what all the cars not only are available to me within a 20-mile radius, a 100-mile radius. I can look throughout the whole country. And then in addition to that, hey, I want to get this car. I want to know what my trade-in value is. The difference is X. And I can also get financing there almost within minutes, as opposed to a prior process of a very laborious paper-based system. Technology has helped shift that, us shopping and us being in place, to local, with us the whole time, and financial services provided at the point of sale. Real-time access to information and products. Again, I can go online and read about that product, see what the cost of it is, see what the upside and downside is, see if people wrote reviews on that. And that could be resolved with technology. And even in the realm of financial services as well, going back to that Uber model, there's things built in places where I can give reviews on products. I can give reviews on services. I can give reviews on, hey, I went into this credit union. They provided excellent service, got me in and out, got me exactly where I wanted to be, and provided a yes to help me achieve what I was trying to achieve. The internet model, too, is another example of technology and how it can be used. And the internet model is a competitive marketplace. I can get on there and get information. I can see prices. I can do price discovery. I can see things. I can even know when it's going to be delivered or when it's estimated to be delivered. But it's a competitive marketplace, many different service providers. Again, in the way of financial services space, many different service providers competing to get my attention, to add value to what I'm trying to do, to help me accomplish my goals. Many participants in the internet model as well. And ultimately, at the end of the day, what I made that decision on at 11 o'clock at night was, hey, who won on both price and speed of delivery? I didn't have to get up. I didn't have to drive into town. I didn't have to go to a store. I could know the price I'm going to pay for it. I can know when it's going to be delivered. And they delivered it to me the next day. And it's 24/7. And finally, the financial empowerment information. A lot of times when we think of, oh, the technology on the financial services piece is just used there to provide loans, maybe give me access to my account so I can see the deposit that came in that day, or making sure a check cleared in time. But instead, in addition to that, technology can be used to provide financial empowerment information. And I like to use the word empowerment, as Christy said during my bio, as part of my time with the Kentucky Department of Financial Institution. I served on our Financial Empowerment Commission. And what we were focused on is not just providing financial literacy and financial information to people, but also helping people, helping populations, helping those that lived in financial deserts, empowering them to make decisions, financial decisions that were going to be impactful to their family, that would help them budget, that would help them spend their money wiser, and that would stretch their dollars further, not only in acquiring things and buying things, but also in the financial services that they need. So again, it's more than just financial literacy. It's helping people make good financial decisions. And as a piece of financial inclusion as well, financial inclusion also includes wealth building, helping people build wealth. So FinTech promises. One of the things too, when I talk about FinTech promises, these are presenting some ideas that FinTech companies are working on right now. I don't want to give the impression, please nobody leave today saying, hey, the NCUA or Director Vice or whatever is advocating a particular technology solution or is advocating a particular company, because it's not. I'm not going to talk about companies here. Instead, I'm just talking about some solutions that are being generated through the technology space today. And what are some of the promises? Talked about one of the barriers being communication and artificial intelligence. And again, I'm not advocating AI, I'm not advocating artificial intelligence, the use of it, but one of the powers of it, it can be used as a communication tool to help break down communication barriers. It's not an end all be all, it's not the ultimate solution to everything, but it can be helpful. Another area of fintech promises is alternative credit scoring models. Like we talked about before, in one of the barriers, if someone is credit invisible, they have no credit score, they have no credit history or minimal credit history, how do we find a yes? How does a credit union find a yes to make them a loan, much needed loan that's needed to provide transportation? In my case, I'm going to even go back. I said I've been a member of a credit union since I was 12 years old. I was credit invisible at one point in time. When I graduated, the only thing I had on my balance sheet was no assets and a bunch of liabilities from student loans. I was tough for me to get a loan. And one of the things I'm so grateful for that my credit union did for me is I needed money to move. My new job was 3 states away. I didn't have any money to move, and I had no money for a new wardrobe that was needed for this new job I got. Went into my credit union, and they weren't necessarily using an alternative credit model, but they found a way to yes, and actually made me a small loan to help all that happen based on just a letter that I had, a commitment letter that I'd be starting on a certain day, and this would be my salary. But alternative credit scoring models are looking at, hey, how just outside of a FICO score, outside of what a credit bureau has, are there other things that can be looked at, such as rent payments, other payments? What's the cash flow of this individual? How much cash they bring in? What's going out? What are some alternative information that can be used to, again, help the credit union make that decision and get to a yes, so to help that member out or to help that individual out get to achieve their goals that they're trying to do. I talked about this a little bit as well. Customizing offerings, that's both loans and deposits based on certain things, internet searches, past purchases. Some companies right now are even looking at using geolocation, one, to verify the member, making sure that fraud's not occurring, but also two, to identify where you are. Just as an example, if geolocation is activated on my phone, I go onto a car lot because I'm looking at a car, want to replace my car. I get a notification that says, hey, Charles, just want to let you know that you have been pre-approved for a loan up to this amount. This would then, and it could even include in there things like based on your credit score, based on your information that we have, your rate will be this. And if you want to finance it for 60 months, your payment would be this. Going ahead and providing that, giving me some assurance. If I find a car I like that day, I know my financial institution is going to be there to help me out with that decision. So again, it's just some things that technology can be used to do. Not saying that that is offered across the board, but it's some things technology, fintech companies are looking at. Finally, identification piece. Not every state offers this right now, but mobile driver's license are becoming a little more prevalent. I think we're up to 18 states that offer both a physical driver's license that everybody has, but also a mobile driver's license, which is a wallet on your phone where you can access the information from your driver's license and use that whenever you need a license or to prove who you are or to identify your age, depending on what type of transaction you're wanting to do. Or if you need to have an interaction with some type of regulatory agency that needs to verify who you are. There's also been a concept of a self-sovereign identification. And the interesting thing about it is that allows multi-factor identification, biometrics, and even voice recognition. Some of the companies I've seen are working on voice recognition, and there's a high confidence rate that once they capture your voice over a period of time, they can recognize that individual at a very high rate. I'm talking like 90% plus that they're confident that that's the individual that they're talking to. And as an example of this, in addition to a mobile driver license, if you don't have that, another example of a digital identification would be Clear. If you go to the airport, I've been flying in and out of Reagan Airport all the time. And I don't use my driver's license to go through TSA. Instead, they have my biometrics, they take a retina scan or a thumbprint scan, and I get through and I never have to show them anything because they know who I am. I went through the process. They've identified me through some kind of other factor other than just me handing them a physical driver's license. And how do those things apply to the customer member identification procedures and customer due diligence? I've already talked about I-10 lending a little bit, so I'm not going to go back over that again. But again, does the credit union have a plan? Is it part of their strategic plan? How are they going to reach out to these communities? How are they going to overcome some of the barriers that we talked about? And one of those ways, and some of the strategies that credit unions are using now, is doing lending based on I-10 numbers and using that as the basis to provide services to members that may not have a social security number or other form, but they have an I-10 number that they've taken. And some credit unions have been very successful in expanding their loan portfolios and finding a way to help members achieve their goals and what they want to accomplish and offering financial services and products that are needed. So, in addition to some promises, there's also some challenges that come about with technology and the uses of technology. One of the things that I'm really concerned about is in this digital age, and information is flowing on a real-time basis, and it's flowing to many different parties. One of the things I am concerned about is who owns that information, who has access to that information. And again, that even ties back to one of the barriers that we just talked about earlier before. That may be one of the concerns that someone coming into your credit union has a concern with. Hey, if I provide you with all this, number one, why do you need it? Number two, what are you going to do with it when you have it? Are you going to send that to somebody else? Are you going to send it to individuals that marketing? Are you going to send that to another agency? Who is going to have access to my information? And so as you go to try to break down some of these financial barriers, I'd encourage financial institutions to think about this. How are you going to communicate these? How are you going to address these concerns? How are you going to make connections to communities that may have these trust issues? They want to know what you're going to do with the information. They want to know why you need this information. What's going to be your communication with them? How are you going to make a connection to them? And how are you going to give them some assurance? You're a trusted entity. You're there to look out for their best interests. And that's another reason I love credit unions as well. They are cooperatives, they're member-based, and the members own the financial institution. That's a strong and powerful message when you're trying to reach a community that may have trust issues, they may have communication issues, and they may have connection issues. Can I connect with you? Do I trust you when I connect with you? And do I know you're going to do what's in my best interest as your member and customer? Finally, one of the things too with this information and how it's flowing, not only who owns it, who has access to it, but also to who's responsible if a breach occurs. A cyber attack that's pretty common today. You pick up the paper, you always see that. We see that in the paper and news headlines all the time. Breaches have occurred. Information was leaked out. There's been so many cases of that. And then who's going to be responsible for that if that occurs? And the notification requirements. If a breach occurs, who's going to notify me? Who's going to let me know? Is it going to be at the point of the breach? Is it going to be my financial institution? But that's one of the things that really needs to be figured out with these technology companies, because one, information is flowing back and forth a lot of times between the credit union, the financial services company, and third parties and fintech companies. So these three things really need to be addressed. They're challenges with technology solutions, and they're something that you need to address and figure out as a society. Another thing is there's fewer human interactions on decisions. And with the use of AI and some of these models that we're seeing right now, there may be biases built into there. Interesting enough, on AI platforms and solutions, there's two variables that need to be overcome and addressed that are very difficult. And that is one with an AI tool, an artificial intelligence tool. One of the variables that you cannot have no way of predicting is number one, what's going to be asked. The second variable, and it ties to the first, is with an AI platform, there's no quality control at the time of the responses being built. So the whole thing with AI, we've got the set of data, set of information that's used to draw the answer from, and a question is asked, an answer is proposed and sent back to them, there could be some biases built into that. There's no quality control piece in the middle of that. Instead, we're trying to get an answer to them as quickly as possible to whoever ask it. And there could be some biases built into that. Could be some biases built in the algorithms in the large language model that was used to answer the question. And finally, what are some of the rights violations? And what I mean by that is when you ask a question, that becomes part of the information from that point forward that platform could use to answer the next question. What happens if bad information is put into the system? What happens if, as the system gets more knowledge and more information and more data, that data has a flaw with it, and that results in bad advice being provided? So again, those are some challenges with technology. Another thing down here that could be a challenge with technology is we as a society are wanting things quicker. We are wanting our lending decisions quicker. We're wanting faster payments. We're wanting payments to be real time. So that way, if my friend takes me out to lunch and I forgot my wallet, but I have my cell phone with me and I need to pay them, I can person to person pay them. But we want that to be real time. And with those faster payments, once that payment occurs, it tends to be very difficult to unwind. So it's a challenge. I'm not saying that it's something that needs to block or stop going to faster payments, but it's something that we need to be aware of, and that could be a challenge with technology. And finally, one of the last challenges I have listed here, and again, this is an all-inclusive list. This is just some things were put down for discussion. Proprietary models and the owner may be reluctant to disclose information. What information is going into the model? How's the model being drafted? But then what's the what is the model doing with that information? And sometimes it's very proprietary. The owners of that model, the people that created it, the technology companies that created this don't want to release that information a lot of times because it is proprietary, and they don't want it out to their competitors or getting out into the marketplace. So sometimes that creates a challenge for both the users and the regulatory agencies as well. Was it a proprietary model, and is the owner willing to let us look at that to see if the model is sound, but also to make sure that what's going on behind it, the algorithms are sound, and that the information going into it is sound. And that may be a little bit of challenge for us. So with that, I will turn it back over, and looking forward to questions that are asked and the discussions that we're going to have going forward.
Thank you so much, Charles.
Yeah, I'll turn it back over to you.
Right. Thank you, Charles. That was very informative presentation. A lot of great information that you offered us. I'm sure everyone got a lot of value out of it. So it is now time for our Q&A session. So if you have a question, please use the Ask a Question feature. If we don't get to your question today, we will get you an answer and include the question and answer when we upload the webinar and the PowerPoints to our learning management system. So Charles, I want to go back a little bit, and this comment I'm going to make leads up really well to our first question, and we have a couple that have come in, actually a few. So you mentioned when you were talking about barriers and you were talking about, serving credit invisibles, and by the way, we do have a course on the LMS about serving credit invisibles, so I encourage people to please check that out. It was well written, well done. But one of the things you talked about during that conversation, you talked about 4 points that I want to reiterate. Being focused, intentionally reaching those communities, impactful on those, that it has to be impactful on those communities, whatever you offer, and it must provide value to your members or to that community. This is a good sort of preamble to the first question. And that first question is, we are a small credit union, only $40 million in assets. Where do we start with fintech or technology? Where should we start?
Yeah, Ron, that is a great question. And it's one of the challenges for you preface this as being a relatively smaller credit union that may be challenged with resources. And again, I think it goes back to the strategic plan. What is the credit union trying to achieve? How does it be impactful to its members? How does it add value to its members? And one of the things that could be frustrating is there's so many technology options out there. Which one do we add to our tech stack? What's the starting point for it? So the bigger thing is, and it goes back to one thing I was talking about before, that the credit union really needs to know its members, to know what's important to them. And probably one of the starting points for that is we do so much right now over the internet and in a mobile capacity and not going into a physical location. So that may be one of the things that they want to look at is if they currently don't offer mobile solutions, is that something that can be added to the tech stack? Is that something the member wants? And again, does it go into adding, impacting the members, what kind of services they need, and they add value? So that's a starting point, but there's so many solutions out there. And I know that that's one of the difficulties and challenges the individual credit unions have is making sure they have the right mix of products, services, and platforms to deliver those services on. And it's definitely one of those that, again, I go back to what's the strategic plan? What's the credit union trying to achieve? And what do the members want? That's some critical things that have to be determined.
Excellent. Thank you, Charles. Our next question is, do you have any insight or advice surrounding e-sign for new business accounts if sufficient CIP is obtained?
Yeah, I really don't have any input into this. I do know we have gone to an e-sign society, and I'm going to go back to a personal experience that I had. A couple of years ago, my wife and I were looking for a small rental home, and I was I live in Lexington, Kentucky, and I was actually at a Cleveland baseball game. My wife went to this open house, said she liked it, and I actually signed everything to make that acquisition and to start the process for us buying that house sitting at that Cleveland baseball game in another state. So e-sign is just part of society today. And one of the things that's preferenced with this, or one of the things you talked about, is you went through the sufficient CIP process. You went through the process to customer identification. You know who that individual is. And if you have a platform, a system, a technology service that you're comfortable with, yes, this is an e-sign process that we're comfortable with, then I think that's just a technology solution that fits into, you've already gone through the CIP, and this is just a way to capture the signature. So we have it as a signature card and let someone e-sign a document being done all the time. And like I said, I even have my own personal experience where I used an e-sign process to purchase a small rental home while I was sitting at a Cleveland baseball game.
Excellent. Thank you. That's funny. And you know, you talked about your personal experience. I also meant to thank you for sharing your personal experience with credit unions at the very beginning. I had a very similar experience myself. My first car, when I was at home as a college student, working my way through college, my mom said, "No worries, we can get the loan through my credit union." And she was right. They financed my very first car. I will never forget it as long as I live. So thank you for sharing that. Very important industry. So our next question, Charles, when you answered my first question, you mentioned about understanding your members, right? You said that's why it's important for credit unions to know their members. So this question, I think, is along the similar lines, but I want to ask it anyway, just in case you have some more you want to share. And the question is, what are the key considerations for credit unions when evaluating potential fintech partnerships in ensuring a successful collaboration? So beyond knowing what your members need, what else would there be?
Um, a couple of things here, Ron. And again, very insightful, great question. And there are so many different service providers out there. Um, One of the interesting things about the fintech space, and I hope I'm not stepping on anybody's toes, but it's also known to have a lot of fast to fail companies. And companies are coming in, they are come up with a new idea. It could be a great idea. Sometimes they lack capital or lack liquidity. And so these companies have a tendency to have a high fail rate. Matter of fact, I was at a conference, and one of the presenters was talking about they invest in technology companies, and they said their first investment was multiple millions of dollars. And 2 years after they made that investment, they had to write it off because the
Mm,
company failed. So it's a reality into the space. These technology companies come in, have great ideas, but sometimes that idea isn't turned out to be profitable. So one of the things that's critical to this piece is the due diligence. Who is this offering the services? What's the technology company? How long they've been in existence? what are their other customers? We have third-party guidance. Highly recommend that the credit union look at our third-party guidance, walk through that process. And a couple of things I would add to that, or have the credit union think about as well, is I know some credit unions that have signed contracts with technology companies, tend to be newer companies. They're offering services to a handful of credit unions, great reviews on it, and they sign a 3-year contract. And part of the way through the contract, that technology company gets acquired, and who acquires, and during up until that point, they have great customer service. They have a problem, they call up, respond back within a very short period of time, and get the problem resolved. But then when that company is acquired, that service level could drop off dramatically. So that's one of the things I think needs to be addressed at as well in some of these contracts is what's the service level? Do you have anything there to address that throughout the life of the contract? And making sure that there's some things that can be done if that service level declines over a period of time. So the due diligence piece is going to be critical, knowing your members, knowing what products they need, finding fintech companies that have a sound track record, been in business for X number of years, have certain number, their financial condition would give them the ability to weather some storms, and they are providing good sound services and products. And another thing too, I'd highly recommend, and this is in our third-party guidance as well, who is going to have access to that information, who's going to have access to that member's information, and how is it going to be protected? And if something happens, who's going to handle that notification and breach piece of it as well?
Excellent. Very good. Actually, your answer is a very good segue to our next, and I'm sure it'll be our last question. This one actually is a two-part question. What protections would you recommend putting in place as we expand our IT platforms and offerings? How would you balance the risk of hackers with the potential for additional users?
Ooh, Ron, you're getting into cybersecurity space. That is a great question, and it is a problem that everybody faces today. And matter of fact, I've got some personal stories. And one of the things that technology is doing today is providing additional information for fraudsters, and they're doing very specific phishing attempts. And it's amazing how the information they're gathering, how they can use that information to try to do a phishing attempt. But definitely that is something that has to be taken into consideration. That is a area of vulnerability that we all have to be aware of. And everybody that I've ever talked to in the cybersecurity space says it's not a matter of it's not a matter of if you've been hacked, it's a matter of when you're going to be hacked, when you're going to have a vulnerability. And during my career, I've had to deal with many different situations, ranging from ransomware attacks to phishing attacks to information being released to financial institutions having to provide customer identification or protections for periods of time because of hacks. So it is a problem that we all face, and the best thing is to be diligent on what you're offering, making sure you do updates when you need to, making sure that everybody in the organization is aware of this. And I'll leave you one other thing to think about. Got a good friend who formed a IT consulting company a couple years ago, and one of the things he did is penetration testing. So let this sink into you. And about 2 years after he set the company up, went to him and said, "Hey, what's the most surprising thing that you've ran into so far?" And again, one of the services he offered was penetration testing. Company would come in, hire him to see if they could get into a system. And he asked me a question back. He said, "What do you think my success rate is in penetrating someone's IT security?" I was thinking, well, it's pretty robust today. Everybody's aware of this. It can't be any higher than 50%. Ron, my friend, who's an IT consultant, been doing that for a while, he said, "I have a 100% success rate."
Wow.
When a company hires me to penetrate their system, I can either find a weakness in the system itself, and if I can't identify weakness in the system themselves, he said, I can always find an employee that is not up to speed, has not been trained properly, and will buy into a story of helping me out. And he said, I've been able to penetrate every system that I've ever been hired to do that to. So again, that's some things to think about. No system is perfect, but you have to be diligent, be mindful, and always be trying to protect the information that you have, because ultimately
Mhm.
it's your members' information.
That's right. Yes. Thank you, Charles. Thank you once again for your wonderful presentation, your great answers to our questions. Again, if we didn't get to your question today, we will send that question on to Charles and get an answer for you. That is all the time we have for today's webinar. Our next webinar will be on CDRLF success stories. So this will be about people who have accessed the grants and loans that NCUA offers and their success stories. On the next couple of slides, you will also see contact information for the CURE offices. So this one is for our consumer access division. So they'll be in the deck when you download them. So you'll have this if you haven't already. And then the next slide also shows the CURE resources contact. If you have information about training or certification or grants or loans or how to access the LMS. So thank you everyone again. I also want to thank Franz and George for their webinar support. I want to thank Christy for her wonderful welcome and for introducing our great speaker we had today. And thank Charles one more time. And thank you all for joining us. That concludes our webinar. Please enjoy the rest of your day. Thank you.